spoken to the TradFi dudes in 2016 about Bitcoin, then in 2017 during the run, then in 2019 during the bear, during 2021 during the bull again, during 2022 and the SBF, and then just a few days ago. And I can guarantee you that there's very little evolution in the understanding of Bitcoin. Your question was about Bitcoin paper products and the effect of those. They will suppress and compress vol, and we should expect that. But will it suppress the price? This might be my naivete, but I ultimately don't believe that it will. It might even make it more of a coil where the suppressors step away. We might have an idyllic government idea, but show me where it is on the map. You won't find it in the way that we have this republic. What I've seen is a tacit acceptance of Bitcoin in this country, which will probably make the United States a Bitcoin mecca of sorts.
This podcast is entertainment, not financial, tax, or legal advice. Views expressed represent statements of the speaker in their individual capacity, do not represent the views of Unchained, and should not be considered investment advice. Speakers often have personal, family, or business connections to Unchained, which may include direct financial benefits. Please see our disclosure at unchained.com/podcast.
Hey, everybody. Welcome back to the Bitcoin Frontier podcast. This week I have on Nik Bhatia. Nik, welcome.
Joe, thanks for having me.
Absolutely. Glad to have you. Let's dive right into markets. I kind of want your holistic overview, or kind of wherever you want to take this question, but from a macro perspective, where do you see markets right now?
Yeah, I probably would start with interest rates. And right now, interest rates seem to be in a change of shape. So the curve seems to be in a period of steepening, and it wants to steepen, but it's struggled to steepen. And that dynamic of the curve struggling to steepen is really related to fear of a growth slowdown. So let's answer it like this. We should always have not just one outcome that we think is going to happen, but the probability of distribution between the different outcomes. So to keep it simple, I like to always think of what are the two outcomes I think are most likely, and they might be completely opposite from each other. And then you assign probabilities to each one of those outcomes. So if you want to present a few outcomes that could happen, we could have reacceleration of inflation. Growth is just remaining very hot, and that remains persistent. You could have the situation where I think right now is happening, where growth and inflation have definitely slowed. Whether or not we're trending to a recession might be irrelevant, but the slow growth, the slow inflation, the elimination of the threat of 4+% inflation, I think is a big deal. Then you have the outright recession, things get bad scenario. So those are kind of three things that might happen. And I would assign about, right now, I'd say 50-50, or let's say 60-40 probability to 60%. I think that growth is slowing and that we'll really, approach a recession. And maybe 40%, I'm feeling there's probably a bigger recession coming in the next year or so. And it's not imminent, because when you look at all of the data, this whole lag of monetary policy, right, where we expect that with rate hikes, the consumer and associated behavior will slow down between 9 and 24 months after. Historically, it's been somewhere in the year plus range. It feels like all of that is about to hit maybe really hard. And I've been focusing a lot on housing. We can talk about that if you want. But that slowdown of the true impact of monetary policy hitting housing in a big way, and that creating a wave of foreclosures. And then foreclosures cause their own mini recession in construction or other housing related sectors. And we know housing is about 20 to 25% of GDP, all of the housing related sectors. Then greater unemployment from more broad slowdown in the housing sector and the economy. None of that can happen in the next, let's say, 3 to 6 months. It's just the momentum in the economy is too strong. So that type of recession really is now still it's 2025's business. But could we get more signs of that over the next 6 months, the rest of this year? I'm, more in that 50-50 camp where I believe things are slowing. Now, what about the economy stays super hot, inflation reaccelerates up to 4%? It's probably lower than maybe 15% probability. And I know I already said 60-40, so you have to balance that in there. So, maybe a third probability that we get a hard recession, a little bit over a third probability that this disinflation is with us. And that, by the way, goes along with rate cuts. The Fed allowing itself to become less restrictive is basically the buzzwords that you'll hear when they cut later this year. There's no need for us to be this restrictive, is what they'll say when they cut later this year. And then the reacceleration in growth just stays super hot, and maybe some productivity gains that we don't see coming. That's, much less than a 1/3 probability in my book, less than a 1/4 probability. So that's my take on what's happening right now. And I'm, at my research, I'm trying to walk through these types of scenarios, think about rates, look at a signal that rates give us, and try to go from there.
I like that. It's very interesting. And maybe like each of those scenarios, can you kind of describe how you would expect Bitcoin to perform in those different potential outcomes?
Yes, well, that's the $288,000 question, isn't it? With Bitcoin, it's a great question, and yeah, I think about this a lot. It's basically what has to drive the overall presentation of our research is in the end, how does all of this affect Bitcoin, the asset class? I think that Bitcoin is supported by the regime that we live in, which is that the policy response will always be liquidity supportive and drive up asset prices. So to keep asset prices supported. From the monetary side, we expect that. From the fiscal side, we expect that. So in the short run, how Bitcoin responds to changes in the economy can be really tough to time. But when you're confident that the policy response will be large, then it's really hard to say, oh, in this case, Bitcoin does worse than in that case, because then it becomes a little bit a matter of timing. Now, your question's probably best answered by what's the worst case scenario for Bitcoin from a global macro perspective? And it would be, it would really be deflationary actions by policymakers. So to let a recession happen, to let a banking crisis happen. So you ask yourself, Joe, under what circumstances would the Fed let a full deposit run collapse, the government not step in with what they did last year with unlimited deposit insurance with Silicon Valley? So those are the most important signals that we can take is what did they do with Silicon Valley? They guaranteed unlimited deposit insurance. What did they do with the balance? That's the government. What did the Fed do with Silicon Valley? The Fed stepped in with another facility that allowed the posting of treasury collateral instead of the selling of treasury collateral into the system. When we saw what happened with COVID, and I think about this more and more now, the liquidity air pocket that hit certain off-the-run treasuries in the long end of the curve brought about the most intense round of quantitative easing that we had ever experienced, and we had seen a lot up until that point in the dozen years prior to that. Those are the most important things for Bitcoin. So what can really hit Bitcoin? A ton of fiscal and monetary responsibility, the allowance of deflation and disinflation to take hold, to allow prices to return just to a state that's not supported by constant bailouts, basically. And that is that's the way to think about, Bitcoin's worst case scenario. And so which one of those, yeah, there's somewhere in there in which the Fed doesn't have to go into QE. It can let QT continue. There's a scenario maybe politically where the government would have less of a budget deficit. I don't know about going to, all sorts of spending cuts broadly. And I don't think it's politically likely to ever get entitlement reform in a major way structurally. So you have to account for that on an ongoing basis. And what will the government do? And so that's where it comes to the dollar, and the dollar not necessarily being a store of value. It's just a currency. And that's why assets always perform. And so Bitcoin will fit right in to the outperformance of assets relative to currency.
Yeah, that makes a lot of sense to me. Something that I've kind of thought about recently, thinking back to 2020 and 2021, is like we had such an unprecedented wave of monetary stimulus, and pretty much, all asset prices, went to the moon in 2021, and including Bitcoin, obviously. And I'm wondering, like, this to some extent, too much, stimulus and easing monetary policy hurt Bitcoin? Because I guess my view of Bitcoin is like no one really knows what it is. They learn about it via Bitcoin being Bitcoin, meaning the number goes up, and then they learn about it more. If we have this another crazy wave of monetary stimulus and GameStop goes to the moon, all these crypto things go to the moon, Nvidia goes to the moon, and Bitcoin goes to the moon at the same time, does that potentially like cloud the judgment of people and like not help them recognize that maybe there is something behind Bitcoin and it's not just like buy everything at the same time?
I think that's a good point. And I think that's what happened in both of the last mega bull runs. And I don't really think you can expect anything different to happen the next time. But each time, Bitcoin's brand grows a little stronger, and a few more people realize that other things are either just a different asset class or a distraction. For us at the Bitcoin layer, it's a little bit of both, where we want to establish that it's not the same asset class, right? But we don't see, with the exception of NVIDIA's wild success this bull run, and whether or not you believe in the valuation, the fact that they're selling the chips that are making the technological change possible, that reality aside, we don't cover NVIDIA because it's a nicely performing asset by itself. We're actually covering it because it's leading the charge on the Nasdaq's correlation with the S&P, and we think about AI and its potential for seriously affecting the economy. So you ask about, what could happen. There is a wave of AI that could change the productivity of either the US or the world, that affects the inflation versus deflation tug of war. The Jeff Booth thesis, right, I think is really important. People don't, they're not familiar with it. Price of tomorrow. The one sentence summary of it is that technology should make prices go down. If somebody costs $100,000 as a dev, you pay them, but now you can take somebody's few hours a week and train the AI to do the same thing that the person did. You've just saved yourself $90,000 in payroll. That's deflationary. You can actually lower your prices. So technology is deflationary. So what's going on there? Then I think about what's going on at the federal level, the judicial level, what just happened at the Supreme Court, what might happen with regulatory agencies if we get a party change. That could affect the entire economy. So those are a lot of blind spots that when I think about productivity. And so the economy and the way that the economy is driven a lot by productivity. Bitcoin, to get back to your question, Bitcoin is not trying to solve any individual technological solution. So it's not the same asset as certain crypto assets or tech stocks, which are all projects in their own right. Bitcoin is a commodity, needs to be thought of as that. And when things are going well for asset prices, Bitcoin will do well, and other individual companies will do well alongside it. So I don't think it matters that there will be a correlation in the future. And I think that there will be.
Yeah, that makes sense. Would you say that Bitcoin is effectively like a gauge on global liquidity? And if so, or if not, or I guess, would you say that's the case or no?
It is, but the caveat here is that the jump off point might not be driven by, or let's say it like this. I think Bitcoin is affected by global liquidity, and it's a good barometer so that when liquidity is pumped into the system, you should see the Bitcoin price react accordingly and go up. And if there's a contraction and stocks are going down, then Bitcoin, and in some sort of crash scenario, that we could expect Bitcoin to perform poorly during that type of scenario. But the jump off point might not be related at all to what's happened trailing liquidity. So in that way, if Bitcoin is at all-time highs and you get a stock market crash, you have the potential for that 80% drawdown. Whereas if Bitcoin is at all-time highs and you see really supportive liquidity and stocks doing well, Bitcoin might just do okay because it's already experienced a good price gain. And so there's, go back to on-chain metrics, a steep MBRV or, some sort of profitability embedded in the network that will just keep a cap on prices. So it's important this is what I think there's a misunderstanding that Bitcoin is just a beta asset, which is what I think maybe a little bit of your question. Is Bitcoin the best barometer for global liquidity? It's a great one, but it is its own commodity. So it can't only be judged in that light.
That makes sense. At the Bitcoin layer, do you guys have like metrics that you like to look at that gauge global liquidity? And if so, like what are they and why do you those specific metrics?
Yeah, so we're working on one right now called TBL liquidity. It's going into our new weekly quantitative report called Mean Median Mode that goes out on Monday mornings to TBL pros. And we're in the process of building it. I've outlined some of the contributors that I think need to go in there. Some of that is going to be on-chain data. And it's, again, this is more of a Bitcoin indicator that we're trying to build out. And within the Bitcoin indicator, which includes on-chain, we are going to look at how do we judge global liquidity. So a nod to Michael Howell and his Capital Wars book and framework, because we've learned a lot from him and we're continuing to do that. His liquidity model is based off of a few things. One of them is the total quantity of government debt that's owned by the banking system, both central banks and the commercial banking system. Another is basically as that market value changes of the debt through time, global liquidity will go up and down because the collateral is multiplied through various, basically repo and other sort of banking arrangements where they can use treasury collateral to expand their balance sheet. Then there is basically one of the most important parts of the framework is that the volatility of the collateral, so that when there's a lot of volatility of the collateral, the haircut of the collateral that you have to take is larger, meaning if you have treasuries, you can only you'll be able to borrow less against them if volatility is high. So volatility of interest rates is therefore a component. But if we think about liquidity, just looking and reading some more retail-focused financial research or media, it might talk about just the Fed's balance sheet size or just the reverse repo program and the Treasury general account and the inverse of that. So that when the government spends money, liquidity goes up because the money goes from the government's checking account into the private sector's checking account. Or when reverse repo goes down, that money is going into other things. It's basically going into treasury bills, which get spent into the economy. right? And so liquidity goes up. So just looking at the Treasury general account and the reverse repo program and the, basically the Fed's balance sheet as a measure of liquidity, or, the Chicago Fed's financial conditions index, which is a representation of volatility. Just looking at that by itself, all these things will not encompass what drives global liquidity. And there's so many things. We're trying to build out our own index without actually asking Michael to help us. So we're learning from him. We're observing. I'm developing more of a relationship with him where we're talking and I'm asking him questions, but I'm not asking him how he builds his index and what goes in it, because I want to do it from first principles and just think of what really is driving markets up and down. We could put a chart of U.S. Treasury 10-year yields in the stock market and see the relationship with our own eyes, so we know that rates affect stocks and that type of thing. But really trying to narrow it down quantitatively it's a large exercise. He's had decades to do it. We're just starting in our quest. But I think this is what people want. They want to understand what the word liquidity means. They want to understand what goes into it. So, I would point people to a couple episodes that we've done recently. One of them was our Michael Howell interview, our latest one. And then I did a follow-up a month later to break down his concept and his model. So that one is called Global Liquidity Explained. And so maybe I would point people to that one to explain how Capital Wars calculates it from our understanding.
In this frontier moment, Nik is talking about his video titled Global Liquidity Explained, where he walks through Michael Howell's Global Liquidity Index. Here's a chart of the GLI, or the Global Liquidity Index, created by Howell at Cross Border Capital. I recently went back and watched Nik's explanation of global liquidity, and I think it clearly explains the massive headwinds and tailwinds for asset prices. This chart clearly shows 2022 and 2023 were brutal years for global liquidity. It's up a bit in 2024 so far, but it seems possible it could go much higher. And now back to Nik.
And then, they can keep reading along and see how we're trying to build that out.
Awesome. Yeah. I look forward to eventually seeing what you guys create. I want to ask you about the models related to Bitcoin that have been such a hot topic, over the last few months. You have stock to flow model and then the power law model have been two funny things that people have been talking about. How do you think about the models? Do you like either of them? Do you hate them both? How do you think about it?
So I don't use either of them, but here's the way that I'm thinking about them. When I teach Bitcoin, when I understood Bitcoin for the first time, it involved a logarithmic chart of Bitcoin on price, not on time, because I know one of them does both, but it looked at Bitcoin on a logarithmic chart on price. And then I had to understand, because I'm not a stats guy, admittedly. That's more the vol traders and the swaptions traders and some of the derivatives traders on Wall Street. Those were they were just more statistics oriented, more quant orientated people. I always loved Fed watching and the exercise of qualitatively trying to figure out what was going on in the economy. Just to give people a background from my trading perspective, I traded rates, but it wasn't the quant and stat side. Okay. So and I studied statistics in college and also graduate school, did terribly in college, didn't do great on the stats course in grad school, but some of it started to click. And looking at Bitcoin on a log chart and forcing myself to understand why it looks like that, because when you place it as an exponent, it is more understandable to the eye. And that was foundational for me in my understanding of Bitcoin. And I did this on a 2016 price chart. This wasn't on anything that had, honestly, it didn't have, it definitely didn't have 5 figures, but it was barely up into the 4 figures. And understanding the fact that it's an exponential adoption process and overlaying that with maybe some of the other technological adoption trends that we've seen in our lifetime with the internet and other associated technologies, exponential just had to be at the center of understanding Bitcoin. So any model that uses log scale is on some sort of correct track. But trying to model out where the Bitcoin price is going to be is just not my game. And so I've avoided trying to get into what I think about the model because it honestly doesn't matter, what I think about it. Price drives me, and so the price is going up on an exponential scale. I can see that with my own eyes. The math proves that as well. And so does that shape or does the slope change over time? Does it decrease over time? Probably. And how does that play out over the future? I think it's natural for us to imagine when Bitcoin hits 6 figures and when it hits 7 figures. I think that's very natural. That would fit in with an exponential path, but trying to time when it's not my game.
Yeah, it is pretty fascinating looking at the log chart of Bitcoin because it's very clear to see the trend that's happening. And I kind of want to get your thoughts on this is like, I feel like economists or academics that study markets like generally believe in some sort of form of like efficient markets or that markets trend toward efficiency. And I feel like if you had to like look back at the price of Bitcoin over the last 15 years on a log chart, it's obviously trending somewhere, at least from my perspective. Like, why do you think more academics or economists are not fascinated by like what's going on here? Because it seems quite bizarre to see this asset trending higher and higher.
I'm going to tell you, Joe, it goes back to what we talked about with that beta idea. People just genuinely think it's beta because they're not ready to understand a 0 to 1 occurrence in this field. They're not prepared for the idea that the entire dollar denomination is being put on watch by this new technology, which is what's happening behind the scenes. But in front of the scenes, there's an asset as a commodity. It's going up in price and it's not being banned. And it's nicely correlated with SPOOs. So they just think it's beta. And I've spoken to the TradFi dudes in 2016 about Bitcoin, then in 2017 during the run, then in 2019 during the bear, during 2021 during the bull again, during 2022 and the SBF, and then just a few days ago. And I can guarantee you that there's very little evolution in the understanding of Bitcoin. Sounds crazy to people that are so into Bitcoin. Like, what do you mean they're not getting it yet? But just not that many are. And I talk to a lot of them. Like, we have institutional readers of the Bitcoin. And, a lot of the guys, they say, yeah, I just listen to your episodes like in the gym or on the way to work and stuff. I just, to try to catch up. And they don't really listen to the Bitcoin stuff. Did you listen to the mining one where, they're changing the way that electricity is being consumed all around the planet? And they're like, no, I skipped that one. But it was a good episode on the yen. And they know, and they're like, yeah, I love or one of the guys, he works at a big bond shop out here. They're in the $1 trillion club. There's only a few of them in Southern California. And he guest lectures for me once a year at USC, and he and I do lunch once or twice a year to catch up. And he goes, man, you put out high quality stuff. But I almost guarantee, and God bless him, I almost guarantee you that he's not allocated. Like he has a 0 position and he's doing very well for himself. He's one of the top credit guys on the planet. I mean, just, they fly him out to Macau and whenever they're doing a new casino and stuff, because he's the one who helps lead the round of, a bond offering that could be several hundred million or multi-billion in size. And, these are brilliant guys that are doing great, that have large portfolios. They don't need Bitcoin to outperform. They've already, outperformed on salary and things like that. But a lot of these guys are not in because there's never been the urgency for them to do it. And no matter how hard I think that I could have pushed earlier, it's not the best use of my time. My time is best used to educate those that are interested. And to be very honest with you, teaching at USC drove me to realize that I need to teach more people this. Because instead of half of my class being interested, and yeah, you get some students that are bored, some students that just absolutely love it. And you have to, and I was like, I want more people that love it. So you hit the internet. But what I don't do is try to go after people that might have money to invest, but they're not really ready for a 0 to 1. And they might buy it because it's a nice beta, but that doesn't mean that they're going to go and understand it. And they might have read the book, but they're like, oh yeah, I read your book. I really liked it, but they might not be long because of it. And so I just think that it's still early.
Yeah. I mean, I definitely agree it's still early. What do you think would be the catalyst for those types of people that are bystanders? They're just not interested at the moment. Is it another wave of number go up? Or will that, like we talked about, kind of get clouded out as, oh, this is just beta, everything's going up right now, and obviously this is going to go up faster?
I think about this a lot. And Joe, this is why and you and I have developed a friendship, and I wanted to do this episode with you. But this is actually why I'm not doing interviews right now, because everything is trying to deliver this second book of mine. And I'm putting all of my big picture thinking into trying to deliver this message. And a little snippet of it is that the people that only earn and spend, so they get deposits and spend deposits, it almost doesn't concern them, because even if you tell them, they can't avoid the circulation of deposits. They can't get out of it. So I'd love to teach them and explain why it's happening. But a lot of people will just they'll never really care enough that the system is changing behind the scenes.
This episode is sponsored by Sound Advisory, an Unchained affiliate. If you can't talk about your Bitcoin wealth with your financial advisor, it might be time to find a new advisor. Sound Advisory is a leading financial advisory firm for long-term Bitcoin holders like yourself. If you need help optimizing taxes, establishing goals, creating a distribution plan for Bitcoin wealth, or designing estate and inheritance plans, then check out Sound Advisory at thesoundadvisory.com for more information. That's thesoundadvisory.com. Now back to the show.
Because they're earning and spending. They see prices go up and it's destructive, and you would hope that wages are keeping up. And we know that they're not necessarily keeping up, so people are frustrated. That leads to a displeasure in the system and a recognition of it. Politically, that might drive change. So far, in the US at least, it hasn't necessarily driven the bipartisan expansion of fiscal and monetary ease that I've lived through. So unless you actually see it politically happening, people aren't really in a position to care. And you would think with some of the waves of populism that we got over the last decade, that some of that energy would come into Bitcoin. And who are we to say that that's not why the price is higher? It could just be that people understand this is what I should own because of everything politically happening. Forget stocks, forget liquidity, forget global liquidity. It could be purely political and we don't know it. All we know is the price. We don't even know how many people own it. We have a guess, but we can't actually know how many people. We can definitely get good guesstimates, from the research, from exchange accounts and addresses and things like that. We don't know why the adoption is happening. So my answer to your question is that the people that are ready to understand what it is as an asset, think about people that invest in real estate. All over the world, there are people that have their real estate portfolios and that's their thing. That'll change to people that have, some of those people just go to their Bitcoin portfolio people. They're like, I prefer my assets digital. And that'll only happen through time, through generations. But I don't think it's any like, green light, like a light bulb moment for people. And they just discover Bitcoin. And now we have all of a sudden another 15% of the population that understands it. Really just giving me a lot of job security at the Bitcoin layer. I think we'll be around a long time to describe this evolution.
Yeah, it seems pretty reasonable. It is. Part of me thinks it is taking a long time, and then other part of me is like, this is the fastest growing asset in the history of money, and so it's actually going in hindsight kind of pretty fast.
Yeah.
Think about it. I also want to ask you about paper Bitcoin. I feel like this has been somewhat of a topic of conversation also over the last few months, especially like since the ETFs have gone out or have been approved and launched. Like I've seen some people say like, how is it possible that billions of dollars have gone into BlackRock and Fidelity ETFs and Bitcoin hasn't, gone to hundreds of thousands of dollars yet? Is paper Bitcoin something to be concerned about, or how do you think about that critic of Bitcoin, generally speaking?
Yeah, I know you wanted to talk about volatility suppression, but volatility suppression due to a lot of existence of derivatives, hedging tools, arbitrage trades, basis trades, selling optionality, selling covered calls, basically selling volatility. The natural expectation is to compress. Volatility compression literally means that the variance of returns will decline. So the up days will be less up and the down days will be less down. The up years will be less up and the down years will be less down. And as the market has developed, you have volatility suppression. But volatility suppression, I don't think that that's related to discovering price discovery. And so Bitcoin and its volatility might decline, which, will be good, but that doesn't mean that it puts a lid on the price. Volatility compression is not price suppression. And volatility suppression is an act of banks and policymakers. So if banks continue to make markets and options, they are suppressing volatility because they are selling, basically they're selling vol into the market. And if a central bank purchases mortgage-backed securities, this is the key. If the Fed buys mortgage-backed securities, if you're a home buyer and you have a mortgage, do you have the option to pay that mortgage off? Yes, you do. It's called a refi or just a prepayment. You have the option. So who sold you that option? Now it's the Fed. So the Fed is engaged in volatility suppression, but the suppression of volatility doesn't compress the price forever. The price will discover itself over a long time horizon. So what was your question? Your question was about Bitcoin paper products and the effect of those. They will suppress and compress vol, and we should expect that. But will it suppress the price? I ultimately, this might be my naivete, but I ultimately don't believe that it will. It might even make it more of a coil where the suppressors step away when it escapes their compressed rate. Because compression, let's just say the suppression itself is writing contracts, like just write it. I'll sell it. You're not selling Bitcoin per se. You're selling volatility so that somebody else is hedged. And that process can quickly reverse when the sellers of vol step away from the market. Then what's going to affect the price? Only the buyers and sellers. And if the sellers go away and there's nobody to sell vol either, then the price will discover itself to the upside, which is, I think, what we've come to expect with Bitcoin. It's these God candle days that make it so unique. And I mean, maybe your question is, do paper Bitcoin contracts like that are just running rampant mean no more God candles? And I would say no. I mean, that's just my...
I think that makes sense to me. It's kind of like, would you agree that it potentially keeps the price in a range for a longer amount of time than it maybe should be trading at until, there's enough coins just scooped off the market at that low of a price, and then there's just not much supply out there. And if enough buyers happen to come in a few months down the line, then the price just starts ripping, and then those vol suppressors step away from the market, and then price goes haywire in another parabolic bull market.
Yes, the gold whisperers. I love these. I love these guys. The reason I love them is because they were the OGs in talking about Fed and QE before Bitcoiners were. So I really do respect them. But they have this idea, they have this concept of the commercial signal failure. This is this idea that the London Bullion Association, at a certain point, they don't have the gold to meet the delivery that's demanded of them on that day because it just overwhelms. And I think that Bitcoin will. I mean, that has to be how it happens, Joe. Is that at a certain time and point in time, the available supply isn't able to meet what people actually want to pull out at the exchanges on that. And then you get a failure, but it's only at the margin and it's corrected by price, right? It's never a failure to deliver, where it's like, oh, we actually heard that there was a shortage of coins during that initial ETF run. There's a shortage, but it's corrected by price, meaning all it has to do is say, oh, I'll pay you 50, or I'll pay you 55 for them, or I'll pay you 60 for them. And then he says, okay, I'll sell it to you there. So coins, there's never a shortage. There's just a shortage at the price, and then it gets corrected by price. So I really believe in markets. I love markets. I think supply and demand should be the determinant. And if supply is paper supply, that's not real supply. And it can be overwhelmed by real demand, which is send it to my Bitcoin address. And we have that mechanism, and it makes Bitcoin the least immune commodity we've ever seen to that manipulation, but it doesn't mean it's not immune.
In this frontier moment, Nik is talking about how Bitcoin is likely fairly immune to paper Bitcoin manipulation. But first, let's take a step back and think about what we're actually talking about here. Bitcoin is digital. How can it be paper? Well, paper Bitcoin is simply a Bitcoin IOU. If you don't hold the keys, you hold a Bitcoin IOU. For price discovery to occur, the market, including you, can help accelerate that process by buying and holding real Bitcoin that you control. If you're not sure if you hold real Bitcoin, you probably hold a Bitcoin IOU. How can you hold real Bitcoin? Well, we can help you do that at Unchained. It's the easiest way to control the keys to your Bitcoin and ensure you're not suppressing the price by holding paper Bitcoin. And now back to Nik.
And whoever can correctly answer how immune it is, I think is at the cutting edge of research. I think that's why people love Caitlin Long, because she talks about this with so much background and thought that you have to warrant what people like Caitlin say. Shout out to Caitlin Long.
When you talk about this volatility suppression, is this something that's like, in your view, like occurred over the last few years, or is this something that's just been occurring for a very, very long time, like all throughout Bitcoin's history? Or is it accelerating, or is it decelerating? Like, how do you think about this over a longer time horizon?
I think that it's a newer phenomenon over the last 3 years or so.
Interesting.
Remember that CME futures went live in 2017. We had Coinbase go public, I believe it was last year. And so between 2017 and 2023, and obviously the court case, which I honestly believe that the ETFs arrived in an era in which we already had some sort of compressed volatility. And I think that the compressed volatility might have been coming from non-CME sources in 2021, right? The Alamedas of the world, potentially. That's also vol suppression, Joe. Even if you're faking it with other customers' deposits, you're still suppressing vol in a way. So it's been around, and I think statistically, we're starting to see it more categorically obvious. One statistic I can give you is the drawdown, right? We haven't had more than, I believe it's a 25% drawdown. And we've touched it in the mid-20s twice in this bull run. but that's pretty unprecedented. So just by itself, we are looking at a compressed fall regime in this current bull run relative to every other bull runs. That by itself is the data. And whether that can continue, we'll have to wait and see. But we should, give some credence to the data.
Yeah, makes sense. I do want to ask you at least one more big question. I feel like the US dollar effectively makes the United States, an incredibly powerful country. Does that change after Bitcoin, or does Bitcoin strengthen the US dollar, to some extent, or the America as a whole? Like, how do you think about that relationship for, the next 10 years or 20 years, maybe?
This is a great question. I've been thinking about this a lot. We have such a phenomenal republic, and happy 4th of July, Joe, to you. We have such a great republic. And the reason it's so great is it is this relative game. So there's a lot of problems with the United States of America. There's a lot of problems in Washington. There's a lot of problems at the state and local level. There's problems in the understanding of who's in charge of what, Fed versus local. There are organizations like the IRS, which, man, that might be the worst thing about the United States is the IRS. And so I think about why people talk about the death of the dollar and the end of the American empire so much. I really do think about that a lot. Why are they so obsessed with the end of it? It's because they see how big the problems are with the states, with the states meaning with the US, with the budget, with the debt, with the wars, with the bases all around the world. And they get so frustrated with that they're like, man, Bitcoin should end the dollar, or Bitcoin needs to replace the dollar because the dollar is associated with this thing that we think is bad, or it's an end of empire stage. And I think that all of that is fair, but the optimist in me thinks that this republic is so much greater from a political perspective, in my opinion, and I'm biased, of course. It's so much greater than every other political organization that exists in the world. That's all we have to choose from. We have we might have an idyllic government idea, but show me where it is on the map, because you won't find it in the way that we have this republic. So what I've seen is a tacit acceptance of Bitcoin in this country, which will probably make the United States a Bitcoin mecca of sorts. Not that it will be the only place or by far and away the best place in the world to do business, but it will have a home here in this country. And that should at the margin benefit the country. And I'm hopeful that politically the country can move toward a place that's more supportive of what Bitcoin represents, which is private property, really, and freedom of speech and freedom of communication and expression. These are highly American ideals. I gave a speech on stage at the University of Texas, Austin, in that gorgeous conference room called Bitcoin is an American Ideal. I gave that speech in 2022, and I really believe that Bitcoin has a home here in the US, and it's the right place for it because there's no republic like this one.
I like that a lot. A few more questions, then we can probably go ahead and start to close this one out. What's it like, and these are kind of like rapid questions, so you don't have to get long answers, but what's it like teaching young people about Bitcoin?
It's thrilling, it's definitely thrilling because you see that they weren't necessarily there because they were obsessed with Bitcoin already. Actually, most of them were not. So it's fun to be the person that explains it to them, because I do it in a very custom way where it would be hard to unsee what I've shown them. And so it's very exciting. But again, I was energized by just teaching in general. So I'm thrilled to reach people all over the world with the YouTube and everything else, because it's not just USC students who I want to teach.
Yeah, I like that a lot. You guys produce obviously very high quality content, so it's great. What's something that you believe that most Bitcoiners would disagree with?
That the dollar is in jeopardy in some way.
Good answer. Or you want to elaborate at all, or no?
No, I think that a lot of my work is based on that.
Yep, for sure. Last question, then we can close it out. What's the biggest risk to Bitcoin in your mind?
Again, it's this responsibility that, who is the messiah of global politics? Show me that person who's ready to come in and fiscally and monetarily fix the situation. So the risk is the messiah, Joe. I don't know what else to say.
Fair. Well, Nik, thanks so much for taking the time to do this. Where can the people go learn more about you and the Bitcoin layer?
Absolutely everything is at thebitcoinlayer.com. You can find, we have a free email product that people love. We have free YouTube and audio content multiple times a week. And we also offer a pro membership, which gives people access to exclusive research, that quantitative report, live Q&As with us as well. So people have a bunch of options, but they can find everything and a ton of free content at thebitcoinlayer.com. And Joe, it's been a pleasure. I appreciate you having me.
Awesome. Thank you, Nik. This was great.